Jim Bianco of Bianco Research joining us now, not expecting any major announcements on rates or curve control, but writing the following. They may offer hints or a framework on forward guidance, but they're under no pressure to change it at this meeting. Jim joins us now. Jim, that shift from stabilization to accommodation, what does it mean to you, sir?
It means that the Fed is going to stay market friendly for a lot longer. They are going to continue to keep rates low. Well, they've already told us they're going to do that for years. They're going to continue to buy securities. They're buying treasuries in the trillions with a T, and they're buying corporate bonds and ETFs and loans in the hundreds of billions, and that shouldn't change anytime soon. So I don't expect them to give us any indication that there's going to be a change on that, at least now. No yield curve control. They'll talk probably about forward guidance, but I don't think we're going to get some kind of major announcement on what that's going to mean just yet.
Jim, there's clearly been a shift in the reaction function over the last 12, 18 months, this shift towards tolerating higher inflation, given the conditioning of the last 10 years with the inflation story and the labour market as well. How do you expect them to formalise that shift in the reaction function in the coming meetings?
You're right. There has been a shift towards tolerating more inflation, but they haven't had any more inflation to actually tolerate. They'll use some highfalutin language like talking about average interest rate targeting, or AIT, which means they have a target of 2%. That'll be an average over a long period of time. So if the inflation rate runs above 2%, and I'll again remind you it hasn't in at least the last 8 years, then they'll tolerate that as long as a long-term average is around 2%. All of that, though, is contingent on the market. If the market is okay with the inflation rate running above 2%, so is the Fed. If the inflation rate goes above 2% and the bond market sells off hard on that news, then the Fed will be forced to change.
Jim, this is what's interesting about this moment. Just because they might say we'll tolerate higher inflation does not mean we will get higher inflation. From the bond market perspective, how do you push that view through treasuries?
Yeah, you know, it's going to be real hard to kind of look at the bond market as a measure of the economy because the Fed seems to be targeting it, to quote the great Charles Goodhart, the economist in Oxford, that a measure cannot, once you turn it into a target, it can't be a measure anymore. So the bond market, I think, is going to continue to react to the idea of stimulus from the central bank. As long as they're in there buying and buying hard, you're going to continue to see rates hover sideways like they have, even in the face of higher inflation. Only when inflation rises to the point where you get like this universal idea in the bond market that it should be avoided, bonds should be avoided because inflation is going up, could the sell-off overwhelm the central bank? But we're nowhere near that right now. So I suspect rates will continue to stay lower and continue to grind sideways. And I would caution anybody from reading too much into that about the state of the economy.
Yeah, Jim, let's talk about the margins we're talking about here. The inflation target at the moment in and around 2%. If they shift to average inflation targeting, what's the effective target? 2.5%, 50 basis points higher, at a push 100. It's not a massive move, is it?
No, it's not. In other words, you're right, that they would allow the inflation rate to go up and stay around 2.5% or so. I might add, the last time it was there was almost 30 years ago. I mean, it's hard to believe that we haven't had 2.5%. I'm talking about core inflation now for almost 30 years. So, yeah, they could, continue to talk about that. And I could continue to pretend that I can high jump 8 feet, too, as well. But, first we actually have to see that target before we actually start talking about whether or not it's meaningful. So if they say they'll tolerate something that they can't do or haven't seen in 30 years, that's nice, but let's see it actually unfold in the first place.
Jim, how do you expect the chairman to navigate the fiscal issues in the news conference?
He'll talk about the need to continue to stimulate the economy. I think he'll try and avoid the question, especially now at this juncture. The Republicans are not in agreement. They're fighting among themselves. They're fighting with the Democrats. No one quite knows what they want to do. And the last thing they need is for the chairman to kind of get in the middle of that fracas. So I suspect he'll try and talk about, the overarching theme that it's important to stimulate the economy. We need something, but be very short on specifics of what that something is.
Do you think the data will do the hard work for them tomorrow to focus the minds of policymakers down in Washington? I'm just looking at initial jobless claims that are due out tomorrow. Jim, the estimate is for continuing claims to pop higher again, just a little bit, and stop that improvement. Are you concerned about the direction of travel at the moment?
Yes, I am very concerned about it, because if you look at the high frequency data, not only claims, They've been trending higher, but mobility, gasoline demand, restaurant bookings, hours worked, they're all trending in the wrong direction. Not meaning that the economy is turning south, more that it has kind of stalled its recovery. We're not back close to any pre-pandemic levels, and we're now starting to stall. And I suspect you're going to get more of that with tomorrow's claims number. And that, I don't know if that'll be enough to add fuel to the fire immediately, but over the next several weeks, you should probably continue to see more sluggish data.
Jim, great to catch up with you, sir. Jim Bianco there of Bianco Research. Looking forward to that claims number tomorrow. I'm not looking forward to it personally, just 24 hours out. 1.43 million is the median estimate right now.